Market analysis and research for accountants. Now, welcome to the first lesson of our Grow Your Accountancy Firm course for accountants. In this module, we'll be looking at market research and analysis. Now, getting your market research right is essential to building the right foundation before you begin to start or grow your firm. By analysing the current trends in global accountancy, you'll be able to build the right vision, offer the right services, and of course attract the right clients. Why market analysis matters for accountants. The accountancy market is expected to grow from 587 billion in 2021 to over 1 trillion in 2026 at a rate of 11.4% and to over 1.7 billion in 2031. The industry is growing rapidly. The opportunities and client base are expanding, but fewer people are becoming accountants. So now is the perfect time to muscle in and grow your firm. But to do that effectively, you need to understand the market. Many accountancy firms overlook market research, assuming that demand for their services will always be steady. But failing to properly analyze the market can lead to struggles in attracting and retaining clients, missed opportunities for growth and service expansion, falling behind in adapting to industry changes, and ineffective marketing and branding efforts. Before we get into how to conduct market research, let's look at why it matters. What's the real impact of understanding your market? Firstly, it helps you stay ahead of trends. The accounting industry is constantly evolving. Technology, regulations, and client expectations changing. Keeping up with and anticipating these trends allows your firm to remain competitive. It identifies opportunities for growth, whether it's expanding into a new service area, targeting a different client base, or using new technology. Market research highlights the best areas for potential expansion. It improves client acquisition and retention. Understanding your market means knowing what clients need, how they make decisions, and what influences their loyalty. It makes your firm more strategic. Market research provides data-driven insights, helping you make informed business decisions instead of relying on guesswork. Think about a successful firm you admire. What makes them stand out? Chances are they deeply understand their market and their clients, using that knowledge to guide their growth. So what can you do next? Review your firm's current client base and services. Identify any gaps where market research could provide insights into improving client retention, attracting new clients, or expanding into new areas. Current trends in the accounting industry. The accounting profession is changing rapidly. To stay competitive, it's crucial to keep up with industry trends, such as, number one, technology and automation. Cloud accounting software, AI-powered bookkeeping, and automation tools are revolutionizing how firms operate. Solutions like QuickBooks, Xero, and AI-driven tax software are improving efficiency, reducing manual errors, and freeing up accountants to focus on advisory services. 58% of accountants surveyed say they intend to use AI to automate their accounting work. Number two, changing regulations and compliance. Tax laws, data security requirements, and financial reporting standards frequently evolve. Keeping up with regulatory changes ensures compliance and prevents legal risks for both your firm and your clients. Studies show that 51% of firms find staying up to date on regulatory changes is their main challenges. Don't be one of them. Number three, the rise of advisory services. Clients are looking for more than just compliance. They want accountants who provide business insights, financial planning, and strategic advice. Firms that focus on advisory services see higher client retention and increased revenue. According to 50% of accountants, the future of the profession depends on new entrants possessing strong financial business advisory skills, including expertise in areas like cash flow and growth modeling. Number four, remote work and virtual firms. Cloud-based tools have made remote working accounting firms more viable than ever. Most firms are embracing a hybrid or fully remote model, allowing them to work with clients across different locations without geographic limitations. More than half of all accountants now work remotely. And number five, niche specializations. Accounting firms are increasingly focusing on specific industries like healthcare, real estate, e-commerce, or offering specialized services such as forensic accounting or cryptocurrency taxation. 82% of accounting firms say clients now anticipate a wider range of services and resources from accountants compared to 5 years ago. Focusing on an industry lets you expand and specialize in the service you offer your target market, helping you to differentiate yourself and attract high-value clients. And number six, outsourcing and offshoring to reduce operational costs and increase efficiencies. Many firms are outsourcing tasks like bookkeeping and payroll to offshore teams. This will provide a larger pool of clients and allow you to focus on higher value client work. Studies show that 90% of CFOs are now outsourcing at least some of their accounting functions. So what can you do next? Stay updated on industry trends by subscribing to accounting news sources like the AICPA or the ICAW or industry blogs. A good idea is to set quarterly reminders to review new technologies, regulatory changes, and emerging client needs. How to conduct a market analysis for your accounting firm. A thorough market analysis helps you understand where your firm stands, identify opportunities, and develop a competitive strategy. Here's how to do it. First, Determine the boundaries of your market. Are you working with small businesses, corporations, or high net worth individuals? Or are your clients mostly in a specific industry? And where are they located? Understanding these details will help you build client profiles, make your marketing more targeted, and specialize your services. Step 2, analyze industry trends and the competitor landscapes. Look at reports from industry sources like the AICPA, ICAW, ACCA. What's happening in the industry? Who are your direct competitors? What services are they offering that you aren't? What are their pricing models? Understanding these factors help you identify gaps in the market and potential opportunities. Step 3, identify client needs and pain points. Talk to your clients, ask them about their biggest financial challenges, conduct surveys or interviews with current clients to understand their biggest financial challenges. Read reviews of competitors to see what their clients appreciate or complain about. Keep an eye on industry challenges that might impact your clients, like new tax laws or financial regulations. Step 4, evaluate market demand and opportunities. Is there room for growth in your area? Are businesses expanding or is the market saturated? What accounting services are underserved in your region or industry niche? Look at where services are lacking. Maybe there's a need for specialist tax advice, financial consulting, or virtual CFO services. Your firm could step in to fill any gaps you spot. So what to do next? Conduct a competitor analysis, list 3 competing firms, and assess their service offerings, pricing models, and client engagement strategies. Identify areas where your firm can differentiate yourself. How to develop client profiles and analysis. Understand your clients on a deeper level allows you to tailor your marketing, services, and communication strategies. One of the best ways to do this is creating profiles both of your current clients and the kind of client you want to attract. So step 1, segment your clients. Start by thinking about the different types of clients you want to target. Remember, not all clients have the same needs. Break them down into categories, who they are and what they need. For example, small business owners need bookkeeping, tax planning, and financial advice. Freelancers and self-employed professionals need tax compliance and expense tracking. Corporations and large businesses need CFO-level advisory services and financial forecasting. Industry-specific clients, such as dentists, e-commerce businesses, or real estate professionals, will each have unique accounting needs based on their industry. Number 2, create client personas. For each category you identify, you need to build a picture of who they are. For each segment, define things like demographics, like age, industry, revenue level, and location. What are their pain points? Is it cash flow issues, tax confusion, or compliance worries? Goals and priorities like scaling their business or reducing tax liabilities. What are their preferred communication channels? Is it email, phone, video calls, or maybe in-person meetings? Number 3, analyze client retention and acquisition. Now you need to think about which of these profiles have you had the most success with in the past? Which of them do you want to target in the future? Think about what type of clients stay with your firm the longest. Are there common patterns amongst clients who leave, e.g. pricing, service gaps? What marketing strategies have been most successful in attracting you new clients? And what will work for clients you're not attracting at the moment? So what can you do next? Create detailed client personas by surveying existing clients and describing clients you want to attract. Gather data like business size, key financial challenges, preferred communication methods, and what they expect from an accountant. Use your market research to grow your firm. Once you've done your market research, you need to use it to inform your business growth plan. So tip 1, differentiate your firm based on what you've learned. If there's a demand for a specific service, such as forensic accounting or advisory services, consider making that a core offering. If competitors are slow to adopt technology, highlight your firm's use of automation and AI to stand out. Tip 2, use data to set pricing service models. If market research shows price sensitivity among small business owners, consider offering tiered pricing plans. If advisory services in high demand, bundle them with the compliance services to increase revenue. Tip 3, identify new marketing channels and client outreach strategies. If younger business owners dominate your target market, focus on digital marketing. If your best clients come from referrals, invest in a referral program to encourage word of mouth growth. Tip 4, regularly update your market research market conditions. As market conditions change all the time, set a schedule to review and update your research quarterly or annually to keep your strategy aligned with evolving trends. Market research isn't something you do once, it's a constant ongoing process. So what can you do next? Based on market research findings, develop a strategic action plan. Outline one change you can implement in your pricing, service structure or marketing strategy over the next 3 months. Communicating market insights to your team and clients. Understanding market research is one thing, using it effectively is another. Here's how to implement and share your findings. Now with your team, regularly discuss market trends in team meetings to keep your staff informed and aligned with your firm's goal. With your clients, use insights from market research to provide proactive advice. For example, if new tax laws affect small businesses, inform your clients early and position your firm as an authority in the field. In your marketing, share research-backed insights on your blog, social media, or webinars to establish authority, expertise, and trust to attract clients. So what can you do next? Schedule a monthly team meeting to discuss market insights and client feedback. Assign specific actions to team members for implementing new strategies based on market research. Ignoring market research is like driving blind. Researching and analysing the market properly lets you build a roadmap and direct action plan to growth. It's the key to making smarter decisions, attracting the right clients, and building a sustainable future for your accounting firm. By understanding industry trends, analysing competitors, and profiling your clients will make long-term strategic decisions, ensuring your firm stays relevant and resilient in a never-changing market. In the next module, we'll be looking at how to implement your market research and analysis by developing an effective vision and mission statement. So see you in lesson 2, and thank you for watching. If you found this valuable, don't forget to subscribe and share it with your network. Thank you.